Hello and welcome to the Stock Planner channel. Today I'd like to talk about UPS, United Parcel Service, and the possibility that we could go long for the next month and a half. But before we get started, I just want to say that this channel is about swing trading, using some indicators, a strategy, and some trade management in order to win. I'd like to show you what I'm trading, and then with the hopes that it'll help you with your trading. I'm not your advisor, and I wouldn't, by the way, I would not take any advice from anybody on the internet. Do your own due diligence, learn it, and you'll become a successful trader eventually, especially if you're a beginner. But if you're more a pro, you could maybe learn a few tricks. I have a Discord chat, and out there I list some of my trades. I have an algorithm I wrote that gives me some RSI, MACD, zigzag, some mean reversions, which I'm not showing here, but also some other indicators that I use, zigzag, when it switches out, and when the stock might drop below 50 or go above the 50. If it goes above the 50, it's normally a sign of, and below it's bearish. And there's some big names here. You can go ahead and do some your own due diligence and see what it looks like for you using your indicators. Today I'd like to talk about UPS. It dropped below the 50. It's saying, hey, it got bearish, and now I would like to look up the reason why. Why did it get bearish? Discord chat, free, Stock Planner. Stock Planner. Looking at the chart, we see that today it really had a tear down, and that's because they've adjusted their earnings, reported their earnings. The tool I'm using here is TradingView. It's free, up to 3 indicators. This is a zigzag, the MACD, stochastic RSI, and the RSI. Take a look at the news here. Earnings per share up 44%. That don't look bad. Shares went down. Revenue went up. It beat Wall Street's prediction. This looks like a fairly good report, yet it went down. Earnings today. Let's zoom out a little bit. See if we can go ahead and see some kind of situation here. RSI is below the 30, and normally we turn the light on to say, hey, look for a buy. We had a big gap, and we know sometimes that it'll fill this. Stocks tend to, especially good stocks, will tend to fill that gap. We had a basic trend down based on this, and we have a print. Zigzag supposedly knows what it's doing, and it says it's down. We're going to check this a little further, but I can tell you this stock is, right at the moment, it is still overvalued. Drawing a fib on the last print. If that's a good print, and the stock is that's the lowest it's going to go. There's where our fibs are. And you can ask yourself the question, is it going to go back to 50% retracement? Or is it going to continue on down here? This wasn't all that bad. Was this an overreaction? And we see the price has hovered at that level, 210, 212 level. So MACD has not crossed over, and we like it to be below the 0. It's not yet. The stochastic RSI, we need to have it come around. It hasn't come around yet. And we need the RSI to come around. It hasn't come around yet, but it's about to. So I'm thinking today is an overreaction, and it'll go back to at least 202. Let's remember that number, 202. Looking at FinViz, which is my go-to to get started, doing some due diligence, we see that UPS has been going up till May, from about March to May. Before that, it was hovering around here at the 165 level. Some people watching this video will say that's the level it's going to return to. It looks like it's heading down that way now. But I think with the way businesses are today and more businesses going online, I believe UPS is going to be a strong contender. As we can see, United Parcel Service is freight and delivery. It's got a positive PE and a forward PE that's positive. That means this company is profitable. It's optional and shortable. I like that. And it's got a sort of a buy rating on like FinViz. Target price. Now this could be old. 218. 218 is right here where it was all-time high. Different analysts have different opinions. I think it's going to be a while to get back to 218. Been no recent upgrades or downgrades, and the earnings beat. I always want to know what they do, a little bit about the company. Wikipedia is a good place to go. 1916, been in operation for a long, long time. There's a truck there. I like the trucks. And then you'll see these little stores all around town. There's the truck today. Love that truck. Trucks throughout the years. Long-term shipping. You see the trucks on the highway all the time. Bicycles, delivery. They have a cargo airline. And they're talking about starting a drone airline, delivering small packages, 50, 60 pounds. They got approved by the FAA with no pound limits. I believe this company is going to stay around for the future. Tip ranks is showing 221 as a target price with 19 analysts. A lot of coverage on this. The average is 221 and a high of 261 and a low of 130. I don't believe it's going to get down to that again. Outperform, that's good. We like to see that. Financials and technicals, according to tip ranks, is good. Hedge fund activity is decreased. We don't like that. But everything else is a good, strong company. That's why I think this is an overreaction today. Earnings date was yesterday, and they haven't changed the target price. So you really can't go by that. Briefly looking at Wall Street without doing all the digging, they're saying this company is 9.5% overvalued. That's not a lot. I thought it was more. The value of the company they're saying is 178, and it's currently trading at 195. So it does have a ways to come down. 195 down to here. 178 down in here somewhere. It definitely could get down to 178, 180. But you said, Dave, you think it's going to go to 202. What do you think? Do you guys see something here? Will it fill the gap? Stocks tend to do it. Good stocks tend to fill the gap. It could get back up to 209. I think it's definitely going up to 202. Let's see if we can go ahead and see. We can buy this stock. If you got a small account, you would need to buy 100 shares, 19,000, and that means you could buy about 5 shares, risking about 1,000. That's an alternative. Buy 5 shares. I do it all the time. Buy small amounts and buy the stock because sometimes it's quicker to get in, quicker to get out. Make a little bit of money. But lately I've been using another tool called Option Strat. We type in UPS and we're going to look to see about an iron butterfly because I'm not really sure what's happening with this. And we could do this August 27th, about a month out. The maximum loss is $1,500. I can handle that, and I get credited to my account $914 that I can actually use. The break evens are between 285 and 204. 185 and 204. 185 and 204. Right here. So as long as it stays in between here, I'm going to win some money. Now, do you think it's going to fill all the way up to here? Then this trade might be in a little trouble. We might have to go to 210 and 180. But remember, we're going to have some downward pressure because this stock is slightly overvalued. Let's go ahead and add another $5 to both ends of that trade and see what we got. See if we can good enough. So we're looking at, let's move this down, 165 and one there. The max loss increases. I'm not sure. No, let's take a look at another strategy, and that is Iron Condor. And we want to make the max loss, it's 170 this time, and 220. We like that. And we'll move this in, moving out a bit. Yeah, I don't like the Iron Condor either. Let's go back to the Iron Butterfly, moving it out. Net credit, max loss, moving it out to September 17th. Now I like these numbers, 170, 220, as long as it breaks even as a 183 and 206. I like these numbers a little bit better. Let's go to 206. See 206 up to here. So we have 206 and 170, which we're way down here. And as long as it stays in between here, we're going to win some money. We're assuming there's going to be some downward pressure. And so I like those apples a little bit better. Let's take another look. All right, let's look at the chart. Here's the days of the trade. And if the stock price gets to a certain level, this is where you can win. I think it's going to rise to this level here, to at least that in the next 10 days. 202. 202. I think it's going to raise to 202 in the next 10 days. My guess. 201. Here we go. So if we put this trade on, and we have about 10 days, and it raised up to this level here, or stayed the same, I could have the winnings there in 10 days. Of course, I could go, take smaller wins over here if it didn't move. But to put this trade on, and if this stock is not moving very much or moving slightly higher, these are the wins I could expect to have. And then as long as it stays in between 206 and 185, 184, you win right here. And these are all the possibilities you can win if you hold it longer. But I like to only hold it for 10 days. So take a smaller profit. 202, putting an iron butterfly, selling a put and selling a call at the 195 level at its current trading price. And then adding the wings of 170 and 220 will give me a net credit of $1,100, of which I could lose about the same amount. And if it gets up to 202 in the next 10 days, I might be able to get $80 or $90. It's the red candle. Does it look like it's going to have some red feedback after this earnings? Is there going to be some down pressure for the market? I think there is. Is there going to be some down pressure for this stock based on its earnings? I think there is. It's not going to just jump back up. But eventually it's going to fill the gap. So I think this is a good play to take a chance. $80 or $90 based on putting up about, and your broker probably is not going to make you put this whole thing up around $1,000, is about 10% in a month, in 10 days, in a month and a half. Do that 8 or 9 times a year. That's some good bread. Oh, anyway, what do you think? You're going to buy the stock, buy an option, spread, not trade this because you still think it's going to have some downward momentum yet? Anything could happen. Do your own due diligence. Let me know in the comments below what you think. Hope this helps. My trading has gotten better, and I have gotten a lot more knowledgeable and have invested a lot less, risked it a lot less. And I do think the market's going to slow up, and doing some of these iron condors and iron butterflies is going to be beneficial. Got to learn them. There's plenty of videos out there. There's guys that can teach us, guys and gals, they can teach us better than I can. Do your own due diligence. All that information is free out there on YouTube, but just be careful. Don't take advice from anyone. This is not a buy or sell recommendation. It's just what I'm going to look at doing tomorrow. I tried to do 2 similar plays like this today. Neither one got exit. Going long on UPS, thinking it was oversold and overhyped, and panic selling. And I do think the gap is going to fill at least to 202. And I've designed a little play using an iron butterfly about 45 days out, a month and a half out, to take advantage of that. And I can always close a trade earlier. Happy trading. Catch you on the flip.